This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and if you recall during the last report I mentioned that this was a potential support area, and then we had a close beneath that support area, and then also a candle with a long wick where we might set up a short trade. And let me zoom in a little bit here to highlight the exact candle that I'm speaking about. That would be this candle right here, and using the high of that candle, and the high of that candle is 88.70, 88.70, and what we would do is look for prices to come up near that level and then look to enter, placing our stop just above that 88.70 area. And now we can see that prices have moved back up towards that level but have not surpassed it. So moving forward here, I still like this trade idea, and that's a bearish bias against that 88.70 high of that candle with the long wick. Also, this is the support area right here, and we can see that prices have yet to close back above that support level. They've left behind several long wicks, so that would add confidence to that short trade idea. However, speaking right now in real time, prices are a little bit far away from that 88.70 area to justify a favorable risk to reward. So what we might do is over the next 24 to 48 hours, look for prices to move up towards that 88.70 area where we can enter with a more favorable risk to reward. The next chart is the Aussie Kiwi. Not much has changed here. Again, still that signal, the short trade off this doji candle right here. The high of that candle, 29.35. I mentioned during the past several reports, and actually during this when prices were up here, also to add to that short trade. And also I mentioned to cover as prices came down to this is a short-term channel resistance line, and a former resistance, and now acting as support in the future, so we might look to take a portion of profits right now. So if you are in that short trade, what I would recommend now is taking at least half the position off the table, taking your profits and holding the rest right now, and maybe even just looking to cover the remainder of the position on the next test of the previous resistance line, which again should act as support as it has during the past 3 sessions. The next chart is the Pound Swiss, and not much has changed here. As I mentioned during the last report, let me zoom out here and get a bigger picture here. What I'm waiting for is prices to come down and test the simple support line. Zooming in to price action, as I mentioned during the last report, there was a doji candle that's located right here. The high of that doji, 73.83. So we'd look to place our stop just above that 73.83 area, and prices are getting close right now to that threshold level where, again, and how I look at all trades is where I'm going to place my stop. So in this case, I'm looking for short trades. My place is going to be stopped above my stop is going to be placed above the high of this doji candle. So now just waiting for prices to come to an area that will generate a favorable risk reward ratio in the trade. Now, moving forward, if we do enter short there, the target would be that longer term support line formed by the late 2008 low and the mid-March low as well. The last chart is the Euro Swiss, and on this pair, still just waiting for prices to test the longer term resistance line right here. If we zoom in a little bit, prices have been going sideways, and now they look like they were going to attempt to test that longer term resistance line, but then we did have a sell-off after that point. So again, over the next 24 to 48 hours, I would just wait patiently for prices to come up and test this longer term resistance line. This is a trade that I've been waiting for several weeks now, and again, I would look to enter just beneath that resistance level with a stop maybe 50 to 75 pips above the resistance level. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.